Good morning. Tuesday, July 25th, 2023. Market pre-open 9:15 a.m. around. Let's get started. Another wonderful day. Let's take a look. Pre-market open, the Diamonds tradable Dow Jones Industry Average ETF flat. It's slightly down. It's flat. It's flat on the Diamond. The Spider is flat. 16 cents off. QQQ's Nasdaq is actually, this one is a little bit up. The QQQ. Russell 2000 a little down, flat. Stocks. Woo. Looks like it's gonna opens up a little. Maybe, who knows, right? Yeah. So we still have this trade on. Yesterday, it was a really inside day. The bar, like small little cross, right? This way, the bar is tiny, right? So it's still an inside day compared to 2 days ago, which is the Friday, 2 trading days ago, the Friday, right? Where it came off. Now it's just going sideways. Looks like pre-open. It's going up a little, up around here, right at the resistance line, I guess, a little bit closer to that top of yesterday's high. And where it's going to open, but who knows what's going to happen. Alright, let's move on. PKX, the banking index. These are not open yet, so pre-market. Sometimes this guy, this KRE, regional banking, slightly up. Financial index, slightly down, flat. It's really flat. Just not much overnight news today. This guy, US dollar came down, and then we traced 50%, right, from here to here. That was the move, and then over the course of this 7 trading days, a week and a half or so, he came back. We traced half of the drop, so kind of invalidated this drop. Energies. Take a look at energies, spiked up yesterday, right? And then the high sellers came back in, push it back a little down, so you got this nice little tail, right? This is the body. It's a huge spike, relatively continuation of this uptrend, right? But it's actually a reversal of this, right? But this is a mini uptrend over the course of a month or so. And then it looks like this is where they say, okay, let's do some profit taking. That's why you have the seller came back in and kind of like press it down, but still up for the day. Maybe end of this nice trend. 1, 2, 3, 4, 5, 6, a 6-day run up. So U.S. oil fund did the same thing as energy. I guess the oils were leading it yesterday. Look at this. 200-day moving average, the red line, this red line. I penetrate above, and they're hesitant now. Now, don't know what's going to do. He's going to fight a little here, bounce off, or continue. Who knows, right? But it does mark it attempt to go into a bull territory. It's WTI crude, West Texas Instrument crude oil, has been under 200-day moving average, and now finally it's trying to break through. Will I take these trades on that? No, I don't like these kind of like switching around when they're fighting 200 moving day. If I'm a fundamental long-term investment, then I would seriously consider buying. When it's above 200 moving days average. But as a trade, is hard to build momentum on these, and there's really fundamentals behind it. So you have to look at the fundamentals. What's the reason behind if it's going to break through this 200 days moving average and continues on? Okay, next, gold. Yeah, nothing much on gold. Dollar, yen, nothing. Bitcoin, there's nothing to do. No, not that I trade. I don't trade Bitcoin at all. So just want to know what's going on in that universe. Natural gas, just pretty dead. 20 years 20 years Treasury bond ETF, right? So the yield sideways compressing between these two white lines, a wedge triangle, nothing. Gold, nothing on gold. Silver, nothing on silver. The China internet, interesting, spike and head for the top, head for this resistance level. Interesting. Maybe something going on. Who knows? We'll see. This is where the resistance level will be around. Okay. Shanghai Index. I share Chinese large cap ETF. Alibaba. Nice spike. Okay. Tencent. Nothing going on with these guys. Baidu. JD. Okay, so a lot of the Chinese tech internet stock lists overseas got a nice big run. Let's go to Apple. Oh, approaching my white line, which is a 21 days moving average, is continuing to drift sideways. Who knows, right? I've been on a nice uptrend, hugging this 21 days moving average. I need a hammer. I need that hammer set up, the hammer candlestick, so I can go long. Nothing on Google. Meta. Let's see. Maybe we'll get something if the market pushes it down. Maybe we'll see something. Maybe we'll have a hammer. Maybe we have a trade. Tesla. Pretty volatile, this guy. Yeah. And this bar basically took the moving average, conversion, divergence, MACD. Alright, cross back down over. You see the fast moving line, the blue line, cross back down the slow moving line. My slow moving line in this case is the 21 days. And then my fast moving line is 8 days, but I'm using exponential moving average for this guy. So which is weighted. That's what it really means. So yeah, they tell me it's momentums of the underlying. The momentum kind of came off, right? You can see once it crossed over, the momentum came off, right? Although here it make little high, it came a crossover, but it touched and bounced right back, right? Give me a red bar right where it touched again. So that tell me there's no buying momentum yet. That's what the MACD I use it for. I kind of usually look at, like, if I have a trade, how long do I hold? Is the momentum continuing, or do I need to get out? And then typically, I don't get out when it's crossover. Moving average is always a lagging indicator. That means the data comes in, right, and then it pulls it down because it's averaging. All right, so the most recent data get added, the oldest data get dropped, and then it averages, so it will always be slow, will be behind the market. So what do I use it? How do I use that? When it's a lagging indicator, I will look at the narrowing of it instead of waiting for the crossover. Because if I have a trade, I want to see when I want to get out. If I am on an upside momentum, I will ride as it continue to widen. Right here, crossover. If I took a trade somewhere here, as it continue up, right, then that means the momentum continues to carry us up. But then, as soon as it start to narrow, I will think about taking profit. A lot of long-term trend following just use this simple moving average indicator. The classical trading strategy with a moving average is when the fast moving average cross over the slow moving average on the upside, you go long. So right here, on this example, right here, this is where the crossover is, right here. This is where you will go long on the next bar, basically. And then you will ride it until it crosses back down over, which is this bar. So you gain this whole profit from here. You ride all the way to around here. To around here. Okay. Now, if I don't use it as an entry signal, but I use it as more of an exit signal, when the moving average starts to narrow, right around here, right, around here, and then when it starts to approach the other line, then I will get out. So I will get a couple bars earlier. I will get around in this area, in these bars instead of all the way down here. So I gain a nice run. I gain additional instead of doing it too late. Right. So I look for the narrowing when it's approaching and potentially before crossover. I want to get out of a momentum trade, of an uptrend. I don't wait till the cross down. I wait till the cross down and then another bar, I will be getting out around this here or this bar instead of getting out maybe here. As it narrow, as it approach over here. So in a way, I use it that I could be ahead of the crossover, ahead what the classical traditional trend followers would do, right? So there's a lot of ways to use exit strategy. You can use the previous high, or you break below the previous high, you get out and stuff like that. But for moving average, it's good in a way is that if it's trending, the fast line will not come down and touch the slow line. It will continue upward like this one right here. Right, it will continue upward. Once it cross, right, this is a long entry signal. Once it cross, right, it will continue upward. Right here, it narrows off a little. Do you get out? Up to you. Right, but it's still not approaching. Maybe, right, you give it maybe a couple more bars, but then it start widening again. Right. So over here, it's approaching. Like on this spot, it's almost touching. Now you have to decide: do you get out of the next spot, or which is here, right? Or do you wait till the crossover happen, and this will give you the crossover, this bar, and then you get out of the next spot, which is here. That you have to decide for yourself. For my purpose, when I do a trend following momentum trade, I look for approaching, and before it's going to cross over, I'm like, okay, the momentum obviously dies off, because look at this. Look at this red bar. This red bar tell me the momentum is dying off. Yes, open gaps down and came back up on that day, on the next day. Well, that tell me, oh, it's probably a good place to get out of this bar before it actually cross over, because I already gained all this profit. Alright, so this is how I use a moving average as an exit signal indicator. I probably will combine with other stuff, but this will help me. That tells me that momentum is dying off, right, on the upside on this guy when it cross back down. And then on the other way, it could be that the fast moving average cross down and you took a short trade, and then when do you get out? When it's fast moving average comes back up approaching the slow moving average, you probably want to get out your short. Matter of fact, you probably want to get out here before it cross over, and then you get out here. This way, if you short here, alright, you don't gain much actually. And if you wait till the crossover happen, you probably either is flat on the trade or actually might even lose money. When you wait for the crossover signal as an exit signal, I will get a narrowing before when it's approaching and it's almost crossing again. Okay, the momentum is gone. And it's pretty obvious if you read the daily bars. The candlestick will tell you, okay, the momentum was the downside, it have is done the down move, right, the downtrend. So I use it more for exit signal, and use it ahead when it approach the potential crossover. Right. Yeah, sometimes you get this fake out, but that is what it is. I rather back a little bit more and get out early than wait till the crossover on the classical moving average crossover strategy. So that's how I do that. Okay, let's move on. Amazon. All right. Oh, 2 minutes till the market open. But typically, I don't trade on the market open. I wait till like things settle for 20 minutes, half an hour, see how things settle. All right. Okay, Amazon's nothing. Netflix, nothing. Right, all these guys are kind of like retracing back. Yeah. Microsoft, nothing. Oracle, nothing. Nvidia, right? The play of the year. Wow, it's coming off. Why at the resistance level? We'll see what it does. Is seller going to try to push it down and then buyers going to come back in? That's what I want to see. That's what I need to see. I want this confirmation. The buyers coming back in. Buyers coming back in charge. And I want to open a long trade. I want to sell puts. I want to sell 20 and below delta puts. That's what I want. That's the trade. I want a false hammer, and I will sell a 20 and below delta put. 18 delta, 16 delta, 12 delta. Depends on how much risk, and I would sell that put. And I probably do a spread, a vertical if it's a high price stock like Nvidia. If there's no price, $50 stock, I probably just leave it as a naked cash secure put. I would sell that. But if a high price stock, and when it comes in, you can really get right through. I would definitely do a vertical so I have a limited loss. Yes, I gain less, but I have a limited loss. So it's proportional. And I want a 1-to-4 ratio. That means for every dollar I can win, I will only risk $4. That is the ideal ratio. 1-to-3 is better, but the VIX volatility is so low right now. You don't have a 1-to-3. You can barely get 1-to-4 when you sell at 20 delta. Okay. So like the SOX trade, SOXX, I was at 1-to-7. That is not very advantageous as far as risk reward wise. However, it seems like a good trade, and hey, sometimes I just want to trade and demonstrate how do I trade a breakout. Alright. Oh, the market just opened. Alright, that's why the flashing stopped. So yeah, the market opened, and we'll see what it does later on. And I will wait probably till the end of the day. Wow, gaps up. Who knows? It doesn't really matter the first 20 minutes or so. We'll see how it goes and what it want to do, and does it give me a confirmation bar that buyers coming in. That's what I want to see. I want to see seller push it down. Alright. And then buyers come back in, give me a false hammer, that'd be great. If it's that will be like that is actually the highest probability trade setup. So I want to emphasize on that. I keep mentioning it on every day what I'm looking for. I want to drill it into your head to help you. To see that one highest probability trade that will give you a winner, that will make you money. That's what I want to pass on to you. Okay, yeah, so I'm gonna come back end of day or midday and see what the markets do and see what's going on. Yeah, look at the news. Nothing much. Rebranding X, Elon Musk, whatever. This will be most important economic development this week, and it's not the flag Fed. Okay, we'll see. Yep, we'll see. It'll be an interesting day. What the market want to do? I look at Goldman Sachs. The banks are really coming back. The big banks are coming back, which is nice. After this drop back in March, yeah. So we're uptrend. Alright, so I want to continue for a few more bars, and I want to see a pullback. Alright, I want to see people taking profits, so I'll try to push it down, and then confirmation that bias comes in, that bias push it back up, right, on that hammer candlestick. On that, I'll open a trade. I'll sell puts, or sell $20 puts. That's what I would do, and I'm waiting for this. I'm waiting, anticipating, looking for the setup. Know what I'm looking for. Know my setup. Know what kind of risk reward. Right? Understand the market condition. Now I just wait for the market to give me the signal. Wait for my confirmation. Right? Wait for money to drop into my lap, into my pocket. That's how it works. Okay, so that's it for today's morning. Thanks for watching, and I see everybody in the next video.